Jay Powell's turn towards hawkishness certainly has upset equities and much else in markets. But one thing that's been consistent is the rise in crude oil, energy companies. Let's talk some more about it with Scott Bauer, joining us, the CEO of Prosper Trading Academy. Scott, so Powell seems to be really pushing to fight inflation here. And if crude is one part of that inflation story, how come this thing just keeps rallying?
Well, you've got a lot of uncertainty, obviously, geopolitically, what's going on in Russia, Ukraine. You've got an OPEC meeting tomorrow. And just the entire overhang of the markets right now with the volatility that we've seen. Obviously, we're seeing volatility really get wiped out right now, if you will. Almost the VIX is almost half of where it was just last week. But in general, the last 4 to 6 weeks, we've seen, very much increased volatility. So I think all of that pressure right there, even with Powell wanting to fight inflation, it's still very much a situation of headwinds in the commodity, especially in the oil space here. And you know what, Oliver, it's interesting because you've got commercial crude stock that actually are building over the last few weeks, but they're still way, way below the 5-year average here.
So, Scott, with the lack of supply coming online, I'm not really surprised that the Saudis aren't eager to start pumping. I don't know who should be. Energy companies in general, the popular media consensus told us all they were the evildoers in the world the past 10 years, and now we want them to start pumping more to save us from inflation. So I guess, if we lost the Fed put, we kind of lost the OPEC call, I guess?
You might have. And it is kind of perplexing to me that the shale drillers are not getting back into the market. They've been so...
That is.
They've been so hesitant because of the hit that they took all of last year and, the better part of 2020. They've been so hesitant. But at these prices, you would think that there's got to be some planning behind the scenes to kick in. I know that, for the last 6 months or so, as oil's been going higher, all they've been thinking is, all right, we've got to think about our shareholders, right? We've got to get a return there. We can't spend any more digging into the ground. But at some point here, and you would think we're already past that point, they've got to get back into the ground, but it's just not happening. So yeah, right now you've got both a supply issue and a demand issue. Last year, when we saw oil, in the tank at the height of the coronavirus and the economy shutting down, it was demand destruction. Right now, you've got massive demand and little supply.
Really like that point. This was the group of wildcatters that did the opposite several years back, drilled too much, spent too much, and burned a lot of the shareholders. And so now it's like there's some overcompensation going on as we're at crude $90. Let's get to it. The energy companies continue to rally. Exxon up big today after earnings. How sustainable of a trade do you think this is? Do you think it makes sense for energy companies to do the kind of vertical exponential moves like we got in growth stocks and tech plays and future stuff? Like, do you think that type of trading activity will make its way towards this corner of the market?
History tells us no, and it shouldn't be that way. However, right now, it's a space that, man, are they on fire? And the expectations for a lot of these big companies, Chevron, Exxon, the like, going into earnings was, they're overbought. They are well overbought. But boy, oh boy, did they deliver. And to me, they delivered, big time surprises. I'm glad that I didn't have a position on, because if anything, I would have been short going into earnings on especially Exxon and Chevron. So I'm glad that I didn't have something on. I absolutely would have been on the wrong side of that.
Okay. All right. So looking at energy continuing to surge here. The dollar has cooled off a little bit the last couple of days. Bonds have calmed. Last thought, Scott, you think this market is moving past its shock from the Fed move, or is this a false sense of security?
I think that the market is accepting a number of rate hikes this year, that number being probably 3 to 4. Okay. I personally don't think we're going to get anything more than that. I mean, unless coronavirus, and this would be a great thing, is completely eradicated in the coming weeks and months, and the economy absolutely gets just blistering along, I don't see how the Fed can raise more than 3 or 4 times. I think the one wild card is, and that expectation is getting less and less and less, is that the Fed is going to raise perhaps by 50 bips in March instead of 25. That is a much lower expectation right now than it was just 4 or 5 days ago. And I think the market is accepting that now, and the market is accepting a 10-year at 2%, because historically, that's still pretty darn cheap.
Scott, I like that point. Blistering hot. So I guess at this juncture, we should be rooting for the Fed to have a reason to get hawkish on us. I like that. It's possible. Airlines doing all right today. Some hope here.
Yeah.
Okay. Thank you, Mr. Bauer, CEO, Prosper Trading Academy. See you soon, sir.
Yes, sir.
All right. Appreciate it. Going to do a little skiing with Scott. I'm going to be out of here the next couple of days.